Hello, everybody. Thanks for joining us today. Your quickly introduce your group of companies. We are providing marketing, technology, and strategy consulting, media and corporate finance services. And through our sisters company, we also have reverse engineering and reverse costing expertise. And with Nomade, we are watching the IP and patent market. My name is David Jordan. I'm part of the sales and coordination customer service from Yole Development. So before starting the presentation, let me give you a few practical informations. First, you have the possibility during all the webcast to submit questions. To do so, you simply have to use the box at the bottom of the screen. It is labeled Ask a Question. We will answer as many questions today as time allows us. However, for remaining questions, we will follow up with you directly by email. And also concerning the materials and content of the presentation, please be aware that they are already available and downloadable in the resources section of the webcast platform. Also, within 44 hours, you will receive an email after this webcast with a link of the recording session. So today, Yole Development and System Plus will share their analysis on DRAM and NAND market. The first presentation will be on the NAND market, followed by the DRAM market, and lastly, an overview of the technology and cost of 3D NAND memories. So the first presentation will be on NAND. This market is managed by Walt Kuhn, our VP of NAND and Memory Research at Yole Development. Walt, please, it's your turn.
Thanks, David. So this is Walt Kuhn. As David mentioned, I cover NAND for Yole. So for today's webcast, I'm going to focus on how an expanding base of demand for NAND, combined with the emergence of 3D NAND, have enabled market expansion. We'll look at some of the key demand drivers today and what we see driving the next wave of demand. Finally, I'll talk about Yole's long-term outlook for the NAND market across a few key metrics. Now, I only have about 15 minutes today, so I'm going to move quickly and keep this fairly high level, but feel free to submit questions to the webcast or reach out to me afterwards if you have follow-up comments or questions. Okay. Oh, sorry, let's get to the... Looks like we got to get to the right slide here. Let me skip back. Okay, so moving forward. So before we look forward, let's take a look back through history. So this chart's looking at historical revenue from calendar Q1 2005 to the most recently reported quarter, which was Q3 of 2018. So despite some cyclicality and seasonality that's evident in this chart, clearly the market's grown over the past 10 plus years. So if you look back to the 2005 timeframe, you'll see revenue in sub $4 billion per quarter run rate, and that grew to around $8 billion a quarter by the end of 2013. And for several quarters, revenue was really quite flat in that kind of $8 billion per quarter run rate. But in this time, starting about mid-2016, there was a huge spike in revenue, which is pretty evident here. And in this time, the market experienced a structural break with revenue jumping from, again, sub $8 billion a quarter to almost $16 billion by Q4 of 2017. So this structural break was driven by a combination of expanding demand, led by the hyperscale companies, as well as suppressed supply in this time frame as the majority of the NAND suppliers were moving through the 3D NAND conversion, which we'll talk more about coming up. So who benefited from all this growth? Well, really the 6 primary vendors, reap the benefits of that structural break and that huge increase in revenue. So this pie chart here is looking at revenue market share for 2018 year to date, so through Q3, calendar Q3 of this year. Samsung's leading the way with about 38% market share, followed by Toshiba at 20%, and then their JV partner, Western Digital, Micron and Hynix, both at about 11% of the market, and finally Intel at 5%. You'll notice I don't have YMTC on here. YMTC's been in the press a lot recently. They're certainly looming on the horizon, but we don't expect significant impact from YMTC until 2020 or later. We will start to see their product in the market this quarter potentially, and in low volumes through 19, but really no major impact until 2020 at the earliest. So what's behind all this growth? Well, at a high level, it's a story of demand expansion and diversification. So if we break this time period for NAND into some distinct eras, I think it'll help tell the story a little bit. So the first era, 2005 through 2008, roughly, was what we're calling the removable storage and consumer era. This is really an extremely consumer-centric time with SD cards, USB flash drives, embedded NAND and MP3 players and digital cameras, and those type of things really driving the vast majority of demand. In fact, in 2007, removable and consumer demand accounted for over 90% of all bit demand in the NAND market. Now, the iPhone launched in 2007, which leads us into our next era, calling the smartphone era. This was still largely driven by removables and consumer, but in this time, mobile demand approached 40%. So 2011, mobile demand had grown to 38% of the market. And again, largely iPhone, as well as by this time, tablets were in the market. So that was driving a lot of demand for NAND. You'll also notice SSDs showing up on the chart. So initially, SSDs were in high-end client and enterprise applications, as well as some caching applications. And that leads us into our current era, which we're calling the SSD era. So this era is marked by the emergence of SSDs, with growing penetration both in the PC space and in the enterprise. So SSD demand today split about 50-50 between client and enterprise. So on this chart for 2018, you see 48% of bit demand going towards SSDs. Roughly half of that is moving towards PC, which is going to be client SSDs mainly in notebook PCs. We have client SSD penetration reaching about 60% in notebooks for 2018. Enterprise SSD demand, so the other half of that 48% here, is split between traditional enterprise customers and hyperscale companies. And as I mentioned earlier, hyperscale companies are really driving a lot of the recent demand growth. So from a technology perspective, what's enabling the continued rise in SSD demand? Well, it's going to be 3D NAND. So 3D NAND has many benefits, and the growth that we've seen in SSDs would not be possible without these benefits that have come from 3D NAND. So 3D NAND enables relaxed lithography, with the focus shifting away from litho to vertical stacking. 3D NAND enables improved performance, so higher endurance, reduced latency, reduced power consumption. In fact, you can get 2D or planar MLC-like performance on 3D TLC, and that's at TLC costs. So that's a big benefit. 3D NAND also enables much higher densities. So if you recall, the final planar nodes, which were 1Y, 1Z type nodes, really maxed out at 128 gigabit die. with 3D NAND, today we see a lot of 256 gigabit die in the market, a lot of 512 gigabit die, and we even see die greater than 1 terabit. These densities will continue to grow as the layer counts increase and QLC emerges in the market. So you'll also notice on this chart we show the 3D, there's a line here showing the 2D to 3D bit crossover. This occurred in mid-2017. And this line is showing the percent of NAND bit production on 3D NAND. So the crossover happened in mid-2017. But by the end of next year, we expect greater than 90% of bit output to be on 3D. If we look at the layer count evolution here and how we see that playing out, this year's 64 layer is the dominant 3D NAND process, with 96 layer beginning to emerge this year, so late this year, ramping up through next year, and really not becoming the dominant process until 2020, at which point we see that accounting for almost half of NAND bit production, with 64 layers still a big part of the market, and a small amount of 128 type products in production as well. We do see a small amount of QLC today on 64 layer, but really 96 layer we think will enable more production, and that's going to enable further cost reductions in the market. So to summarize, 3D NAND enables continued scaling and lower costs, which is obviously very important for the client SSD growth due to the emphasis on keeping down the storage BOM cost in the PC. But I think even more so, the improvements in cost and density and performance are extremely important in the data center, and we view that as the single most important segment in the market today. So, why is the data center so important? Well, it's in the middle of two super trends, artificial intelligence and Internet of Things, that are both at the forefront of demand expansion for memory. So when we go through the next few slides, I'm talking about NAND, but really these same trends apply to DRAM and other emerging memories as well. So you've probably heard of these trends, but you're not going to find an AI or an IoT, on Amazon. These aren't products, but they're enabling technologies behind a wide range of products and other technologies that impact, I think, all of our lives. So when I think about AI and IoT, I'm really thinking about the connected home. So your smart thermostats, your lights, your security cameras, your Ring doorbells, and all of those connected devices that are starting to show up in the home. I'm thinking about your smartphones and your personal assistants, whether it might be an Echo, Amazon Echo today, but in the future, it's probably going to be something totally different. Thinking about virtual, augmented reality, smart cities, intelligent factories, smarter, safer cars, and in the future, fully autonomous vehicles. So all of these are going to be heavily reliant on the data center, and all of these will be reliant on the networks that connect them all. And that's why we view the coming 5G rollout as so important. So we see 5G just further amplifying these demand trends. And we believe that the improved device performance and connectivity will drive increased value and demand for these devices, which is obviously going to lead to more and more data generation, more data processing, and more storage, both in the cloud and on the edge, so on the devices themselves. So you have this virtuous cycle between the data center and all of these connected devices, which is driving more and more demand for memory products. And so with these super trends kind of augmenting that existing base of demand that I already talked about, so the removable, the mobile, we think that long-term demand outlook for memory is promising. So I've talked about the historical demand trends that have enabled NAND market expansion, the technological advancements with 3D NAND that are fueling the SSD era, as well as the next wave of end demand driven by AI, IoT, and the data center. And I think automotive, specifically autonomous driving, is going to be a huge part of that growth, even beyond this time period that we're looking at here through 2023. And so those are, some high level topics, but I'd like to wrap up with a brief discussion of our actual outlook for the NAND market and kind of the trends we're seeing. So first, we expect revenue expansion in the long term. So slide on the bottom left is our view of industry revenue. So we expect revenue to grow. And this isn't only driven by, this is driven by the expanding base of demand that I described on the prior slides. In addition, there's a huge market today being served by hard disk drives. And we think over time, as NAND costs continue to decline, more and more of that market is going to shift over to NAND-based storage solutions. In the near term, through 2018 and today, we're seeing weakness in NAND. So there's been a bit of a slowdown. There was an inventory build through 2018, and that was, partially driven by a lot of bit output from the 64-layer conversion as that ramped and as yields improved, as well as a bit of a pause in some of the demand on the data center side. So it's not the long-term outlook's great, but it's not always linear up and to the right. There's going to be pauses and stops and starts. And I think we hit a bit of a pause. And because of that, there was a bit of a supply-demand imbalance, which has led to some weakness. So we do expect a little bit of a dip in revenue in 2019. But going forward, we think, again, that the long-term outlook's positive. And given some recent CapEx cuts and some challenges with 92, 96 layer, we think there's going to be a little bit lower supply growth in the back half of 19, and that's going to lead to better supply-demand balance in the second half. So we do expect a bit of a recovery in the back half of next year. So we expect that NAND prices, price declines will, the rate of price declines will slow over time. That's corresponding to slower cost per bit declines as the technology is becoming increasingly complex and capital intensity continues to increase. We do expect the price declines we model, we do expect them to slightly outpace cost declines, which indicates some margin contraction for the suppliers. And if you think about a new entrant coming into the market from China, that's likely going to cause a little added pressure and should drive down margins somewhat. Third, we expect shipment growth to slow in the future. And this is based on that aforementioned technology complexity, which continues to increase, and the slowing transitions. So moving from one node or one process to the next is getting a little bit harder and harder, and it's taking a little bit longer each time. Additionally, we think the bit per wafer benefit from each successive node is going to lessen over time. So you're not always doubling the layer counts or even increasing by 50% each time. So as those jumps become smaller and smaller, the bit per wafer growth also becomes smaller and smaller over time. So in conclusion, I would characterize our long-term outlook for the NAND market as cautiously optimistic. We're pretty positive on the demand side, but the supply side, there's a few more unknowns. But absent any unforeseen macro events or a more aggressive entrance into the market from China, we think the long-term supply-demand dynamics are very favorable. And with that, I'll wrap it up. So thanks for your time. I'll turn it back over to David to move it along.
Thank you all for the interesting overview. Once again, feel free to ask some questions in the box, and we'll try to answer them at the end of the webcast. Now let's continue with an overview of the DRAM market by Mike Howard, our VP of DRAM and Memory Research at Yole Development. Walt, the floor is yours.
All right, good morning. I'm Mike Howard. I'm responsible for DRAM here at Yole Research. The DRAM market has changed dramatically over the past few years, and today I'm going to talk about three themes that we believe have changed the market and that we think will shape it going forward. So theme one, supplier consolidation. So here we have a chart of the number of suppliers with at least 3% market share. And if you look back to the early 90s, there were 13 of these suppliers in the market with at least 3% market share. Now, this is an era when Japan really dominated the DRAM market. However, during the 90s, due to hyper competition, some pretty significant periods of oversupply, a lot of these Japanese companies simply exited DRAM. Now, that brings us to the 2000s. During the 2000s, we saw the rise and the eventual fall of Taiwanese DRAM. Several reasons for this. First of all, the Taiwanese never developed their own technology. They generally licensed it. And by doing this, they never really had control of their technical destiny. Second, the entire industry just overbuilt capacity in the early 2000s, which led to sort of persistent oversupply through the decade. And finally, in 2008, with this sort of macroeconomic meltdown, demand fell off pretty dramatically, and it really marginalized the smaller suppliers and led to continued consolidation. So what did this mean for the competitive landscape in the 90s? Let's look at 1991. Again, lots of small players. It took 13 suppliers to control 95% of the market. And one of the challenges of this is that if you're a small supplier, you have very limited perspective on demand. You have a very narrow view of overall demand if you only control 5 or 10% of the market. Additionally, if there's all these small suppliers, it's difficult to keep track of all of them. It's hard to understand what all of these guys are doing with regards to supply, how much supply they're adding each year. So you have a poor view of overall supply. Now, let's fast forward to 2018. Today, 3 suppliers control 95% of the market. And all of these 3 suppliers have a pretty good view of demand. They see all segments. They're exposed to all of the big OEMs. They get much better demand signals. Additionally, there's fewer competitors to track. And so if you only have 3 large competitors to track, it's relatively easy as compared to lots of small competitors. Now, it's still difficult. There's still lots of variables to supply, and it's still very difficult to get it right, but it's relatively easy compared to how it was just 5, 10, or 15 years ago. So what has consolidation meant for the industry? Well, first of all, the large suppliers that remain have a better understanding of demand. They just know the market better. Additionally, since there's fewer competitors, it's easier to understand the overall competitive landscape. So there's a better understanding of supply. And this better understanding of supply and demand, we believe, is leading to better decisions, better strategic decisions, and an overall more stable market. So that's the first theme. The second theme I want to talk about is demand. Now, Walt touched on demand, but I think it's also worthwhile to go into it a little bit more depth from the DRAM perspective. If we go back to the early 90s, this was really the PC era. The PC dominated DRAM with sort of 75, 80% of overall demand going into PCs. And as everybody got on the internet in the 90s and the early 2000s, the PC really drove demand. Now, that shifted in 2007 when Apple introduced the iPhone. Very quickly, a lot of demand shifted from PC over to the smartphone. And within 10 years, the smartphone really drove more demand than the PC. Now, the thing is not all of that demand was additive. The smartphone certainly cannibalized some of that PC demand as people decided, hey, I don't need a PC to get on the internet. I'll just use my phone. Now, today, certainly smartphones still very important, almost 40% of demand. But the driver of the demand today is the data center. And Walt talked to some of the reasons why the data center is driving demand. And this is, for DRAM, going to be the big driver for the next several years. It's the fastest growing segment, and it's become a very competitive, fast growing segment for DRAM. But it's not the end of DRAM. We look beyond the data center to an era when we see automotive demand being the big driver of demand. Now, the timing of this is certainly up for debate. There are those in Silicon Valley that believe that we are just 1 or 2 algorithms away from a fully autonomous car. Yet there are others in industry who think that we are 10 or 20 years away from a fully autonomous car. Regardless of the timing of sort of L5 level autonomous cars, it's still going to be a big driver of DRAM demand. And depending on that timing, could drive as much as 25% of overall DRAM demand. So again, demand has shifted. Looking at 1991, it was very PC centric. If you wanted to be in the DRAM industry, then you were selling into the PC segment. It was a sort of a one segment industry. Looking at 2018, today there's 3 very large, pretty dynamic segments. So suppliers have a lot more latitude as to their strategies and where they send product. And demand diversification has had some pretty nice outcomes for the industry. First of all, it's led to demand stability. If one segment is relatively weak, then production can be shifted towards other segments. And so the peaks and valleys of demand of the separate segments are sort of tend to balance each other out. And a good example of this is actually Intel's recent 14 nanometer CPU shortage. So if this had happened in the 90s, it would have been pretty catastrophic for the DRAM industry. We would have seen a severe oversupply. We would have seen prices collapse. It would have been ugly. But today, you know, I mean, it's had an impact, but it's been pretty well balanced by the other segments. We haven't seen a dramatic fall in the DRAM market because of the CPU shortage. Additionally, the demand diversification has led to product diversification. So if you're a customer of DRAM, you have a lot more options today when you go to design in a product than you did in years past. Additionally, from the supplier's perspective, there's a lot of different avenues for your go-to-market strategy. You can focus on a data center heavy strategy, or you have more solutions for how you go to market. It's not just all about focusing on reducing cost, which in the PC era is what it was all about. So again, demand diversification, we believe the net result has been an overall healthier DRAM industry. And the third theme I'm going to touch on is how the technical challenges facing DRAM are really changing the dynamics of the industry. And so what I've got here is a chart of the bits per wafer growth. So for example, in 2008, we would expect a wafer in 2008 to have roughly 45% more bits on it than one in 2007. This is because of shrinking the die. 2018, that number is down around 20%, and it's pretty obvious from this chart that it's decreasing. The industry's ability to shrink is diminishing, and as their ability to shrink lessens each year, it's getting harder to grow supply by simply shrinking the die. And additionally, it means that the cost reductions that they're able to realize are getting smaller and smaller each year. This is having some real impacts on the industry. Another big impact of all, the increasing difficulty of shrinking DRAM is that it's becoming a lot more capital intensive. So the dark orange line here is a chart of the CapEx required per 1% bit growth. And if we go back beyond sort of 5 years, it was generally pretty stable at around $250 million of CapEx per 1% of bit growth. Okay, and then it started to increase. Today, we're approaching $1 billion per 1% bit growth, and this is something that we expect to continue increasing as we go through time. What's behind this? Well, the smaller lithographies are requiring increasingly exotic tools, and exotic tools are expensive tools. So the tooling is getting more expensive. Additionally, the designs are getting increasingly complex, which means more processing steps are required. More processing steps requires more tools, and more tools take more space, and all of this just costs more and more money. So the capital intensity is generally increasing, and this is something that we expect to continue increasing as we go forward. So what's this led to? So the outcomes of these technical challenges, first of all, it's very difficult to grow bit supply very quickly in DRAM. Whereas in the past, you could simply shrink the die and grow bits on a wafer 45% a year. We're down to 20% a year now, and that's going to be down to under 15% very soon. So it's very difficult to grow supply quickly by just shrinking the die. Secondly, cost declines are slowing. Due to the increasing capital intensity of DRAM, it's becoming more expensive, and therefore the cost declines that they're able to realize each process shift are declining. And this means that suppliers are just very sensitive to price declines. So if suppliers see prices start to declining 10, 15, 20% in a quarter, they can no longer pull costs out of their product fast enough to keep up with that. So they're ultra sensitive to that. And finally, capital intensity, the increasing capital intensity is leading to bigger and bigger financial bets on each process shift or capacity expansion. And obviously, big financial bets get a lot more scrutiny than small financial bets. And so suppliers are required, they need a lot more assurance today than they did in the past that the supply-demand balance going forward is going to be favorable. So the net result is we think that supply is a lot less likely today to dramatically overshoot demand, particularly for a long period of time. There's still going to be some, ebbs and flows between the balance between supply and demand. But long term, we think big overshoots are a lot less likely. This leading to an overall more stable DRAM market. So in summary, we talked about three themes. The first theme, supplier consolidation. We think this will lead to stability. The second theme, demand diversification. We think this too will lead to stability. And not to sound redundant, but the final, technical challenges, we think this too will lead to stability. So how is this going to impact the numbers going forward? Let's take a look at revenue. Revenue has jumped considerably over the last couple of years. From if we go back a few years, it kind of hovered around $40 billion. We saw that jump to over $70 billion last year and over $100 billion this year. This is a number that will obviously fluctuate going forward, but we expect it to sort of remain above $100 billion for the foreseeable future, with a sort of 5-year average going forward at about $112 billion. Looking at shipment growth, it wasn't unusual 10 years ago for shipments to grow 50 to 80% in DRAM. Today, it's very much hovering right around 20% going forward. Again, this will ebb and flow, but for the next 5 years, we expect shipments to grow on average 20%. It's worth pointing out that at the tail end of our forecast, we do expect that growth to increase slightly. This largely being influenced by the entrance of China into the DRAM industry. We think they're going to push growth up a little bit. Now this ties to pricing. We've seen a couple of tremendous years in the DRAM industry. 2017 prices jumped 45%. This year we expect prices to jump about 20%. That's not going to go on forever. Today prices are already falling. We expect prices next year to be down 18 to 20%. And long term, we expect manufacturing costs to decline, and we do expect prices to come down. Long term 5-year average about 15% year on year. Now, 15% price declines are actually bigger than cost declines. So we are expecting some margin compression. Margins peaked at about 66% in Q3 of this year. That was a record for DRAM, and it's a level that we don't expect to see again. Over the next few years, we do expect margins to gradually decline. Still a 5-year average of about 54%, but sort of down into that 40, high 30% range by 2023. Still a healthy industry. And if you look at 2015 and 16, still well above those levels. But in general, margins coming down for the next few years to a little bit more reasonable levels than they have been in 2018. And so that's how we see these three themes impacting DRAM and the market in the coming years. And with that, I'll hand it back over to David. Thank you for your time.
Thanks a lot, Mike. Thanks for the insights. Now it's time for Belinda Dubé, who is Semiconductor Cost Analyst at System Plus Consulting, to provide us with a technology and cost overview of the pre-NAND memory. Belinda, it's your turn.
Thank you, David. I'm Belinda Dubé, and I'm a memory analyst at System Plus Consulting. And so I will briefly take you through the technology and the cost overview of the 3D NAND memory technology. And so to begin with, I would like to present the main manufacturers in the 3D NAND memory industry, starting with Samsung, which has actually the highest manufacturer. And we also have at the same time Toshiba and SanDisk. And SK Hynix is also one of the major manufacturers. Intel and Micron are also one of the key players in the NAND industry. So the NAND memory demand continues to escalate, and the manufacturers are now faced with providing higher capacity for the memories that are more reliable. So the manufacturing complexity actually sees growth and birth also to new agreements that we have. As we can see, we have Toshiba and SanDisk that have an agreement on the flash forward ventures, and the 3D NAND, the layers that have been made for the 3D NAND are actually made by both of them, Toshiba and SanDisk, working together. And also at the same time, we have Intel and Micron that actually works together in the IM flash technology. So here we have the NAND roadmap. The manufacturers are actually moving also at the same pace. They're all being led by SK Hynix. That is actually a step ahead with 72 layers in the market. But it has recently announced the availability of the 96 layer at the end of this year or early 2019. So we will see actually a faster rise in the stacking of layers as the years goes by, as the manufacturer actually gets to improve the stacking technology. So here, as you can see, we have actually a cross-section of the 3D NAND, the 64 layer that is from Toshiba and SanDisk, and also the 72 layer from SK Hynix. In order to increase the capacity, the manufacturers are actually adding more and more layers to their 3D NAND stacking. So with each generation, in order to provide more wet lines that can actually stock the information in the NAND die. So SK Hynix actually has the highest NAND layers at the moment in the market. As the layers actually increase, we know that the machinery will have to be changed to actually match the technology that is being used. And the manufacturing complexity will escalate at the same time, and the cost will increase as we continue to add on the layers. So the different strategies have actually been taken by the different manufacturers to actually decrease the manufacturing complexity. Because as we can see here, we have the 64 layer from Toshiba. For the wet line, they actually had 4 nanometers, as SK Hynix has 72 layers. As you go up the layers, you increase the layers, but the wet line actually decreases. So this is one of the strategy of moving forward, is actually the different manufacturers moving from TLC and going to QLC in order to fit more data per memory cell. Micron and Intel are actually working together in the recent production. They're actually stacking more layers, more decks to their 3D NAND technology. So here, as you are working on the way that they manufacture when they are producing the 3D NAND, the layers are actually stacked one after the other. It can be silicon nitride and silicon oxide. So when you're stacking such layers, a very huge number of these layers to be stacked, you would actually have to deposit the layers very slowly. So this slow deposition is actually one of the major setbacks that the manufacturers are having. So here we have the non-memory technology that is actually different for 3 manufacturers. We have 3 manufacturers that are actually have moved on to the charge trap layer, and we have Micron and Intel that is still using the floating gate. So this is an example of Samsung, SK Hynix, and Toshiba. They all use the same technique of the charge trap layer. They're actually using silicon oxide, silicon nitride, and silicon oxide also to actually trap the charge. We have tungsten that they use as the word line, and aluminum oxide is also used as a high dielectric blocking layer. So when they are depositing these materials, they face the challenge of the machinery that they have to do, because it has to be done by atomic layer deposition. That will be very slow and quite complex and quite expensive. Compared to the Micron and Intel that is still using the floating gate. So the 4 images here, they show the NAND dies after removing the top metal layers. This reveals the memory strings that actually hold on to the information. So as you decrease the memory string, this is one of their strategies that they are having. They try to decrease the memory string, the NAND string area, so that they can have a higher density on the die. So the memory string is actually made smaller, and also another way to optimize, they use the channel hole density. They actually use a more denser orthogonal matrix in order to fit in more channel strings in the die. So they actually have major challenges when they are actually manufacturing the 3D NAND die. They have the first one that I have explained before, the deposition of the layers. As they deposit more and more after each generation, it's going to be harder to deposit the layers. The machinery that is going to be used will have to be changed, and the deposition will have to be very slow, and that is very time consuming. And also it comes down to the high aspect ratio etch that is actually done to create the channel holes. So with this high aspect ratio etch, it is prone, for most manufacturers, it is prone to having defects if the layers are stacked, more and more layers are being made with each generation. We could actually have a higher aspect ratio etching that will be very slow to do and very expensive. And also another problem that they are facing is the staircase etching, where they have to connect the contacts to the wet lines. So this staircase etching actually will add on to the number of lithography and the patterning that has to be done with each generation. So here, as I have said here, that the challenges that they are facing is the case etching. The main thing that they are trying to do is to decrease the lithography count. So how do they decrease the lithography count? It's actually using a patterning technology where they pattern more stairs with each step that they have. So here we have Samsung that actually patterns 4 wet lines with each staircase that they have. And here for IM flash technology, that is Micron and Intel, they only have two stairs that are actually connected. So the multiple wet lines will have to be etched at a time, and also the etching will also have to be done in the different directions. So the pattern chosen has an impact on the lithography and the costs of the staircase etching. The higher the steps etched at a time, the less time it will take. The more the layers, the more the etching steps that are going to be to be done. So with each generation, when they increase to 96 layers, there will be more lithography count that is going to be done. I talked about the aspect ratio. So here we actually have a strategy that Micron and Intel have to overcome this. They actually have a double stacking where they stack the layers. They first have to do the first 37 layers. This is the first stack that they have. They will stack the 37 layers, and then they will have to have a separating material that they have, and then now have to stack the second material, the second deck that they have. So with the first deck that they have here, they are going to stack everything, all the layers that they have, and then also now create the channel holes. So when they do this, their aspect ratio actually goes down. It is 22:1. So they actually have less defects that they could face with this technology. And actually the staircase etching is actually reduced when they use this method. So let's look at Samsung, what they have. Samsung will actually stack all the layers up. So we have a high aspect ratio of 39:1, and that also applies to Toshiba with a high aspect ratio of 31:8, and SK Hynix, as you increase the number of layers, as I said, the high aspect ratio edge will also have to increase, and it has to be done very slowly. When it's done very slowly, it's consuming and time taxing, and that would actually make it more expensive to do. So here we have 50:1 for the 72 layer that SK Hynix has, and for the 64 layers we have 39 or 38:1 aspect ratio edge. So for the cost per process step, the step, as I said, that as you increase the number of layers, the stacking of the layers. This is one of the first steps that has to be done. It's actually very expensive. As you can see here from the breakdown, we have almost 10% of the cost of the total cost of the memory is actually applied to the stacking of the layers. So the more the layers that will be actually deposited, the more it will be more expensive to manufacture it. So also here, as I said, the lithography is one of the most expensive steps. That is actually 2% of the total cost of the manufacture of the memory. And also the staircase etching, as we can see, it's almost 3.1%, which is actually very high. So the more the number of layers, a new technique will have to be devised, and a new patterning will have to be devised that can actually etch the layers and actually reduce the lithography count and also reduce the etching of the steps. So here I'll give you a brief summary of the memory wafer cost, the 3D NAND, the metal layers. So here the breakdown of the cost actually contains the clean room cost, the consumable, this is the material that is being used, the equipment cost, and the labor that is used to manufacture the 3D NAND memory. So here I am only counting the 3D NAND layers and the metal layers, the top metal layers. This excludes the CMOS cost. So actually our wafer cost is almost $1,000, and 60% is actually linked to the equipment cost. So here we can see actually that as you are producing the 3D NAND, most of the cost is actually linked to the equipment because of the difficult and the complex process that it is. And the next cost will actually have to be the consumable, the material that is being used. The material that is being used is actually also a little bit expensive. So I come here to summarize for you the four manufacturers, as I say, Toshiba, SanDisk, and Samsung, SK Hynix, and Micron. We actually have their dies that have been analyzed. From the images that you can see, you can estimate and see that the die size of Micron is very small, and also the die size is very small. One would actually ask themselves why the die size is very small for Micron. It's actually because of their strategy of making the CMOS under. The CMOS under is made under the layers of the 3D NAND. So when they stack now, they will stack on top of the CMOS. So when they stack on top of the CMOS, the space of the CMOS is actually not occupied somewhere else compared to the other three manufacturers that actually have the CMOS part on the side and on its own that actually occupies most part of the die. So we actually have a higher memory efficiency, die area efficiency for Micron with this technique of the CMOS under. And this actually also increases the density, the memory density. We have 4.43 gigabytes per millimeter square for Micron. So with their small NAND die, this actually helps them in having a greater number of potential good dies per each 300 millimeter wafer. We have almost 1,000 dies for Micron and Intel, whilst we look at the other manufacturers that actually have way less than that. So this actually helps Micron to produce a way greater potential gigabytes per wafer. And also here we have the technology, as Walt had said, that the lithography is actually relaxed for the 3D NAND. We have 19 nanometer for Toshiba, and the rest are using 20 nanometer lithography. So the storage type here, we see that Micron is still taking the floating gate technique, and the others are usually taking the charge trap technique. So this is a brief summary of the cost per gigabytes, the comparison that was done. So Intel and Micron, from their die that they have, they actually have the least cost for per gigabyte, followed by Toshiba, and SK Hynix actually has the highest cost per gigabyte, and this is actually because of the number of layers that it has. Thank you so much for your attention, but before I finish, I would like to say you can actually find a more detailed study of our analysis of the 3D NAND, where we have the comparison, and System Plus Consulting has released 2 reports on the detailed technology and the cost analysis of the NAND die. A comparison report that actually gives you the die cost, the breakdown of the metal layer, the CMOS cost, and the memory cells, and the difference of the cost per gigabyte that is produced by the top manufacturers. Thank you so much for your time. I am done.
Thank you very much, Belinda. Thank you all for your presentation. Well, the time has passed by. We have then just time for answering one questions for everybody. First, Mike, we got one question, which is, what impact will China have on the DRAM market?
Okay, David, what was, I'm sorry, could you repeat the question?
Yeah, what will be the impact of China on the DRAM market?
Okay, so obviously we could spend an hour talking about the impact of China. Look, our take on the on China is, first of all, as I alluded to, that are growing the fastest. So data center, smartphones still very important. These are categories that need leading edge DRAM. Everything that we've seen coming out of China so far has been very lagging. And so it's not really going to fit very well with the demand market. So they might be able to produce bits, but they're not bits that are really highly demanded. So first of all, there's technical challenges. Second of all, you know, for them to catch up is going to take a number of years. That's why we really don't have a significant China impact until 2022, 2023. And that's even a challenge. We're not, you know, there's a level of uncertainty to that. So our take on China is they've got a lot of technical challenges. We think they're going to be slow to ramp because there's no point in running a bunch of DRAM wafers if there's nowhere to sell them. We don't expect that impact to happen until the tail end of our forecast. Long term, absolutely, we think China will be a big part of the DRAM market, but we think it's going to happen over a long enough period that the other suppliers will be able to react and we won't move into a period, or at least a prolonged, steady period of oversupply impacting prices and so forth. So net, China's coming into DRAM, but we still think it's several years out.
Thank you, Mike. Well, one question for Walt. Well, the question is, how will QLC impact the memory market?
Okay, so, I'd say first, we don't expect significant impact from QLC in the near term. Today, it's just, single-digit kind of percent of output, really only coming from Intel and Micron today. But longer term, we do expect there to be some impact because QLC, the real benefit there is that it enables lower cost per bit. So relative to TLC, QLC enables 20 to 25% cost per bit reduction. And that's going to be compelling for certain areas of the market that are very cost sensitive. So we think, as I mentioned in my presentation, there's still a big part of the market, storage market, being served by hard disk drives. With cost reductions that QLC enables, I think that's going to open up more and more of that HDD market to SSDs. So I think NAND will start getting closer and closer to that cold storage kind of arena with QLC. There's also potential for some unique solutions like hybrid drives. So in theory, a 3D crosspoint in QLC drive could enable, or hybrid drive could enable very good performance using the 3D crosspoint, but also high densities due to the low cost QLC. So, net, we think over time, this cost position of QLC will enable, the market for NAND to expand a little bit.
Right. Thank you, Walt. A last question for Belinda this time.
Okay.
Belinda, the question is, what advantage does Micron have using the floating gate technology compared to the other manufacturers?
Okay, that's a good question. So for the floating gate, it seems to be working really well for Micron. I think it is actually less expensive for them to carry on with this technique. There is less number of steps in the manufacturing process for them, like the deposition of tungsten, wet line, that is actually done by the other manufacturers. They don't have to do that because they are using polysilicon. And also the deposition of the charge trap material is very expensive to do and very complicated. So this is actually an advantage for them. So the floating gate is actually a well-mastered technique as it has been used for a long time now. So Micron and Intel, they have highly mastered the technique, and they are able to actually raise their yield with each generation, and actually more than the other manufacturers. So their yield is actually way higher. So for them, this technique is actually way easier to do and carry on. For the moment, it's actually working well for them. I think that's it.
Right, thank you, Belinda. So the webcast is ending. Just a few additional information. You will receive an email within 24 hours. This email will include the link to the recorded session of the webcast, so you can review it. You can also download the presentation from the webcast platform right now, and you can share it with all the people and colleagues that could benefit from it. Also, let me remind you that you can find all our analysis and reports on our web portal called imicronews.com, i-micronews.com. You have all our sales and contact information on the last slides. Then thank you very much for joining us today, and we wish you a very good end of day. Thank you. Bye-bye.